Welcome to Wealth Creation Series, where we learn and grow together with one goal, the goal of creating wealth. If you like this video, please hit like and subscribe to this channel. Welcome back, everyone. At Wealth Creation Series, we talk about creating wealth for ourselves and ultimately achieving a life of financial freedom and success. I am like many of you guys who want to move ahead in life, secure a financial future, and have multiple streams of income so I too can enjoy and provide for my family. And that is why I decided to make these YouTube videos, because I wanted to do something that I really love doing. And as a result, I came up with Wealth Creation Series, and I thought I'd share my journey along with everyone else out here. And I just wanted to document it and kind of help others who are trying to achieve the same goals and at the same time have some fun. I hope one day these videos would get monetized and I start making some monetary gain out of them. And once I do that, I'd probably invest more time into these videos and create better content. As yes, I do agree that I need to continuously improve myself and improve my content. That's the reason why I always try to do the best I can. But that's enough about me for now. I really hope you like this video, and if you do, please do give a thumbs up. And with that, we can get into our main stories today, which are: so President Trump had been diagnosed with having coronavirus, and he's been treated at the Walter Reed Military Hospital in Bethesda. So news break out, and we'll check at how that had ramifications on the stock market and how it has shaken the stock market up because of that. And then we have in another news, which is like the New York mayor, which is proposing to to close down the schools again because the coronavirus rate is again on the rise and it's being touted as the second wave. So we'll look into that. After which we have Amazon, which came out with a slew of new products, and we'll get into that. And after that, we have news about California and why is everybody wanting to leave California and why it has become such a big deal. Then in the second part of this episode, we'll talk about the 3 stocks that I'm buying currently in this market and why I am doing so. So I hope you enjoyed this episode, and let's get into it. It came out over the weekend that President Donald Trump was uh, infected with coronavirus and being taken up to the hospital to get his checkup done, and that he would be staying there for at least a few days, and people were worried about his health and what kind of ramifications it would have on the economy. But and because of which the stock market futures did go down. However, today morning they have again come up because we have again the news that people are optimistic that Trump will leave Walter Reed Hospital and return to White House, and that is why the market has gone up again. I was hoping for a little bit dip to buy stocks at a good price, but I guess it's not there yet. However, you can see over here that after the news which has come today, that he's all right and things are looking good. The stock market has gone up again by 1.77%, up by around 60 points as of now. After that, we talk about New York mayor who's proposing to close schools in the business in 9 schools and businesses in 9 areas because of high COVID rate. We could probably see that there's an uptick in the rates in New York, and because of which I'll just show you. It's You can just type in coronavirus cases by state, and so you could see it was around 700 to 500, around that range, and then suddenly now it has gone up to 1700. This kind of caught the mayor of New York by surprise, and they just wanted to be sure to contain the infection, and that's why they have said that they could propose closing schools. Now, why am I telling you this? It's because how this could affect the stock market. If things go down things go down badly, they again the government starts imposing more restrictions on the businesses and schools and colleges and everything, and shuts down the economy again. That will probably be a big problem, and I don't know if the economy could sustain a second round of coronavirus. However, it does not look like that at this time, so I'm kind of being optimist about it for now. Heavy cash position, because I do kind of think that there will be some kind of correction soon. It could be because of the virus, or it could be because of the election, but I think there is a correction coming soon. Okay, so next we have is Amazon. Amazon launched a slew of new products. Many of them were updated ones. They were like the new Eero 6 Wi-Fi mesh routers, and new video game streaming service called Luna. They also have the new Echo Show and the Ring security drone camera, which I'll just let the video play so you could see for yourself.
Alexa, call Dad.
Happy birthday, baby girl.
Hi, Grandpa. Did you get it? Did you get it?
Believe me, you gonna love it.
Alexa, show me cupcake recipes from Food Network. 1.5 cups of graham crackers. Alexa, show me the front door. Alexa, play Mrs. Maisel on Prime Video.
Your weird ask. A weird what? It's the thing I asked for in your contract. You kept hounding me. When he asked what it is, I was blank. So the room should be filled with pennies.
The Echo Show is not only a screen now, but it also has a camera and actually follows you around when you are in your kitchen or wherever you've placed it. So all I can say is welcome to the future, and I hope you're not concerned about your privacy when it comes to Jeff Bezos listening in and watching all that you do in your living room and your kitchen. Then the next product is the Amazon drone, and you can check it out yourself. It's a flying drone which will hover inside your home and use it, and Amazon will use it to protect your house. So just see their commercial first. So not only now Amazon can see inside your home, move around in your house and listen to your conversations, but also listen to your the way you speak to someone through their Halo Fitness app, their fitness band, and tell you to keep your temper in check. Ladies and gentlemen, all I can say is welcome to the future. So, in our next story, we have people who are living in droves from California. California is facing a big issue just now where many of its residents are leaving. You might have seen many videos also on YouTube, such as people leaving California and why they are. So you can see here like famous people like Ben Shapiro and Joe Rogan and many other celebrities are leaving California just now. And you would wonder why it's happening. And it's because of not only the coronavirus, which people have, because of which people have to stay home, have lost jobs. They are in a city, in a state which is one of the most expensive ones in the country. There's the homeless crisis, and on top of that, there's tax. And when you have a state where the top 1% is paying 40 to 50% of the tax and they still want to tax the people more, then we have a problem. So, because of all these issues, people now want to kind of move away from the city, and the tax problem in California is only going to get worse. And I don't see this disappearing in the short term because people just don't move from one city to another like so frequently or like without reason, and it's very hard for people to come back. So I think this is going to be a problem, and the reason why I am kind of discussing this is because you might have REITs which are focused in California and they might not be doing well just now, and you might want to invest thinking, oh, they are low just now, but I don't know about this situation because rents for the first time have fallen in the last 20 years. 20% of the rent has fallen down, like the rents have gone low. There builders and landlords are finding it difficult to find people who are willing to stay and pay rent. So it's a big event which is kind of happening just now. So I just wanted to caution people about it. So in this next part of my episode, we'll talk about the stocks that I'm buying just now. We know that the market has been overvalued right now, and finding deals in this market is hard, but if you look deep, you might still get few deals here and there. As most of you know, I am a dividend growth investors. I kind of want to buy stocks which I kind of find have deep value in them, and I invest in those. With that being said, let's look at the 3 stocks that I'm buying this month. All right. So the first one on the list is AbbVie, ticker symbol ABBV. They are basically a pharmaceutical company. They are a spin-off of Abbott Laboratories. It's giving a big dividend yield of 5.8% and has a dividend growth streak of 7 years. However, it's more if you consider it being a part of Abbott. It's got a consistently nice dividend growth which you can see out here, and it's growing at a very good pace as well. The reason why AbbVie is down is because they have this product called Humira, which is one of the top selling drugs in the world, and that's coming to a patent expiry sometime next year. So investors feel that so investors feel that like the huge revenue, it's going to miss out on the huge revenue because of that. However, I see at this price that that miss of revenue is already kind of priced in. It also has another drug called Botox, which you all might be familiar with, and that is not doing well as well because of the pandemic, because right now people are not doing elective surgery. So because of that, the demand has gone down right now, and this company is at a discount, and it's giving quite a good dividend value as well. So I'd recommend you looking into this company further, because I do not see the revenues falling down so soon. You can see out here in the last 1 year that the prices had fallen down. It went up to all the way to 98, and then it's again down 11%. I had bought a few shares at these levels of around 79. I'm going to add a few more just now to bring down my average cost. Okay, so the next company is Johnson and Johnson. You might be familiar with the multinational, and it's been in business since over 100 years with the consistent dividend payout. Has many well-known brands such as Listerine, Aveeno, and others. They are not into just consumer, but they are also into medical equipment, which are not doing well just now because again a lot of elective surgery is not going on, but the consumer arm is doing pretty well. It's giving a decent dividend deal of 2.76% with a 51 payout ratio. It's only one of the few AAA rated balance sheets, if I'm correct. And you can see the dividend history out here. Going right back to 1990, you can see a nice consistent, you can see a slope. Nice consistent all the way going up. I know this is not at a discount right now, but at the same time, it's not at a premium. It's trading at almost its fair value, and I don't mind adding this company. The next one in the list is at&t, the telecom giant. I know many of you think that right now, because at&t, right now the company is facing a lot of challenges, especially they have made bad decisions over the years, and that is the reason why this company is right now trading at a discount and is not valued as much as I think it would be. However, they have a ton of debt on them because of the direct TV deal, and I do see that the company is kind of trying to pay off that massive debt right now, but they have a huge cash flow as well. Or you see, they have a massive dividend yield of 7.25% and a dividend growth of over 20 years. You can see over here that in the last 5 years, the price has not moved much. However, right now when you see it, you see over here that it's trading here at a discount value. It is well below it's almost trading, sorry, it's almost trading at its 52-week low, which is $26 over here. And I don't mind picking up more of these shares. I already had, it's one of those positions which it's not in green, but I still don't mind picking up more of it because the dividend seems to be pretty safe on it. And I think that in the long run, with the management paying off the debts and their focus shifting from direct TV to streaming services such as Peacock, which is a freemium version, I think they would come ahead as well. Alright, so this is it for this week. I hope you liked this episode of the Wealth Creation series. I will bring in more ideas for financial success next week. If you did like the video, learn something new, or just enjoyed listening, please give me a thumbs up by pressing the like and subscribe button. I make these videos for entertainment purposes only. I am not a licensed advisor. Please do your own research before investing.